What's up, guys? It's May 9th, 2025. We had a trading range day. The open got a leg two from yesterday's move, so that's pretty nice. Oops. So yeah, almost 1-to-1. Want to give a quick shout out to all the moms. Happy Mother's Day. It's in a couple of days on Sunday, so I hope you guys are having fun and drinking mimosas and spending it however you want to spend it. Daily chart, 15-minute chart. We're in that third leg. I've been harping on that for a while now. A couple ways to count it. Even then, whichever way you count it, it both adds up to either leg 3 or leg 4. So you could say leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Or you could say leg 1, pull back leg 2, pull back leg 3. Any leg past 2, leg 2 is the probabilities for trading range go up, which means trend continuation go down. There's enough momentum on this bar to get that, so this bar can get its own second leg. And it did, what is that? Is this bar today or is that bar today? I think this is yesterday's bar. Hold on. Yeah, so yesterday we want to take past this bar, so it did get its own type of leg 2, leg 1, pull back leg 2. And overall, that puts us in the third leg, however you decide to count, leg 1, pull back leg 2, pull back leg 3. Bulls are trying to get above this swing. He talked about how when there's a downtrend, the pullbacks become targets for the bulls when the rally starts. So that's what bulls want, and bears want this to be the high of the range. Maybe keep a small gap open right around here and sell back off. Market's going sideways, so it's hard to say, are we going to go higher or are we going to hit the EMA first? It doesn't really matter which way it goes because we're day traders, so we trade what we see. 15-minute chart. Is this yesterday's price action? Yeah, yesterday's. So this is today's price action right there. Yesterday we had a rally, and then it went side. We had 3 legs higher, leg 1, pull back leg 2, pull back leg 3. Then we went sideways to down, leg 1, pull back leg 2. This second leg broke out of this trading range and it was strong to get its own second leg. So now we can say leg 1, pull back leg 2, and then we went sideways. Do you guys see how there's a rotation going on here? Within the market cycle is breakout. The first opposite bar starts to channel phase, and then any leg past leg 2 starts to trading range, whether we realize it or not. So let's just say leg 1, pull back leg 2, pull back leg 3. Sideways price action, breaks out, leg 1, pull back leg 2, pull back leg 3, sideways price action. That's the entire market cycle, up and down. And then within this entire thing, this is a trading range too. We've been in a trading range for quite some time. Can you kind of see the 3 visible legs? I just counted it here. Leg 1, pull back, leg 2, pull back, leg 3, and now we're going sideways. That's an example of fractal price action. We talked a lot about fractal price action today in Discord. I think it was a good conversation. If you're not in the Discord, there'll be a link at the bottom in the comments. Join and read that conversation because it was pretty good. I was talking to one of the traders about how he was saying that this is a pullback, and I was saying it is, but what he was describing was also it happened right here. I was trying to explain to him that there's 3 legs down, leg 1, pull back, leg 2, pull back, leg 3. I think he did get it after a while, so that's what's important, is just to add that extra dimension, because that's a fractal 3 legs down, but on the 5-minute chart, it is the first leg down. Leg 1, pull back, leg 2, pull back, leg 3, or you could say leg 1, pull back, leg 2, pull back, leg 3. Many ways to count it, but what's important is we can start to piece together the visible pullback. So this is a chart we're looking at, and I call them visible pullbacks. And then we can, while we're reading that, we can also read the smaller time frames. So for instance, leg 1, pull back, leg 2, pull back, leg 3. But before this price action unfolded, there was already 3 legs into the EMA right here. Leg 1, pull back, leg 2, pull back, leg 3. And that's a wedge top into resistance that's usually going to sell. And it sold right here for 2 legs down. Now we have this actually 3 pushes. Leg 1, pull back, leg 2, pull back, leg 3. It's a support, and then it rallied. New low right here, so you could argue leg 1, pull back, all these are candles, but leg 2, pull back, leg 3. Because there's tails all here, so these are all trend line breaks on smaller time frames. And then together, this entire structure had its own 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Pretty cool day. I did all right. I could see if you're a breakout trader, is it difficult because you're going to buy 30 hoping for a reversal. Bam, you get slammed out. Then you're going to short right around here. Maybe you make a couple points. It goes more sideways to down. And then it rallies. I think bar 47 was climactic for the bears because it sold off very fast and then rallied, being a final leg. Yesterday we had a sell-off. Today we have a gap up. Bar 1 trading right under the EMA. Bar 2, bulls tried to buy the breakout, but it reverses, trapping bulls. And then bar 3, bulls are now underwater. Bear bar closing on slow. Bar 4 is an inside bar. It's a bull bar. I really hope you guys can't hear the construction workers. I waited like 15 minutes to make sure they were done, and now they started again. But it's faint. They're not hammering. They're cutting something. So I apologize if you can hear that. Bar 4, inside bar, bad bull body, closing below its midpoint, has more tail, trading range. Could be a pullback. Leg 1, pullback, leg 2. The leg 2 is hidden in bar 5 because it's a rally. We can't see it. But we know on a smaller time frame there's a leg 2 because of a tail. Then we rally into the EMA, bar 6. Bar 6 didn't close above the EMA, so that's a warning that something's wrong with this breakout. And then we see follow through 7. Again, more tail than body above 7. And then look at 8. It got to the EMA, sold off, and rallied. I think this sell-off is a sneaky way of letting you know bears are trying to short the EMA. If you wanted to count the legs, leg 1, pullback, leg 2, pullback, leg 3, that's also a wedge top into resistance. Bulls can't make a new high of the day, so if you're looking for that reversal, just be cautious. If you bought this bar, be ready to hit out on 9 for a small loss instead of a bigger loss. Here's a double top. The context for a double top is pretty important, and we can see that happen right here. So bulls see bar 1, and they buy the high. We know that because there's a tail on bar 2. Instead of getting continuation, it sells off. Bulls are going to try and cover their position here. So they're going to buy more lower, and we can see that with 3 and 4, we start to get bull bars at new lows. And the market rallies right back to their entry. This gives the bulls an opportunity to hit out at break even on their first trade. So this trade is break even, and they make a profit on their second trade. Their average price is going to be right around here, and that move right here is their profits. So bulls are going to hit out of their longs. They're going to sell. Remember I talked about yesterday how they're going to sell out of shorts, or excuse me, they're going to sell out of longs. At the same time they're going to sell out of longs, bears are going to short the double top, hoping for what they got, a sell-off. And that gives context to 9, 10, 11, 12, 13, 14. 9, bear bar closing on slow. 10, big bear bar closing on slow, and it makes the gap with 11. Now we have good follow. Now we have good follow through, 3 bear bars in a row. We're looking for that first pullback, and then 12 becomes climactic. Biggest bar, it does produce a gap, but it's very big after a few bars down, so I wouldn't be too happy to short 12. If you're going to short it, you got to short it for a scalp. The close on 12 is the start to the first pullback, which ends on the high of 13 and sells off, so that's the first reversal right here. And then 14 makes a good scalp. Bad close, it's closing right below its midpoint, has more tail. We're trading right below the EMA. We've been in a bull regime for a couple of days. Well, been back and forth. But 14 lets you know that the pullback is going to start soon. Same situation with 12. There's a tail, so bulls are starting to buy lows. 15, bull bar closing on its high. Good enough for a second leg up. And we see the second leg up with 16 because there's a trend line break. Boom. Close on its high, but then bad fall through 17. Now we have a visible pullback right around there. 17, bear bar. It's a trading range bar, so we know it's two-side trading. Ends up being a pullback for 15 and 16. Then we have 18, bull bar closing on its high. And then 19, a bull bar closing on its high. 20 is a small bar. I think the market's becoming climactic with bar 19. Sold off and rallied right into resistance. Right under the bar 11 breakdown. That's where I had my limit order, and I shorted 11 and got filled on 21. 21, bad bear bar, closing above its midpoint. So bulls are trying to buy right around here at the breakout point for a rally, but they make a small scalp and then they have to hit out. They could also hold and cover themselves, which in this case they did. They caught that second leg 1, pullback leg 2. 23, bear bar closing on slow. 24, you can see that there's trapped bears. They shorted here and 24 went 1 tick below and then rallied, so now they're trapped. Bears are going to try and short higher. The same situation. Bears short, or bulls buy here, buy more here, get out here. Happened to the bears. Bears got short here. They're going to sell more here, and then made a quick scalp on bar 25. And then it rallies. They buy back shorts. Bulls are buying into support, and that causes the second leg 1, pullback leg 2. 26 touches the EMA. You might be thinking this is a double top. And I can definitely see some traders getting trapped here trying to get short. Once you see 27, 28, 29, that's a 3 bull bar microchannel. It's okay to get out. In this case, it worked if you held on, but I think you do risk the chance of a reversal because 30 does look strong. 30 is the best looking bar except for bar 15. So keep that in mind. Good looking bar at the end of 3 legs could be climactic. There is no gap, lots of overlap, so bears are not really that trapped. Bar 31, bear bar closing on slow. And now there's a now there's a gap here. The gap started with a bull bar, so it's not the strongest. 32, follow through. There's a second leg hidden right there. Leg 1, pull back leg 2. That's the second leg trap because it actually went more sideways. Now there's a fractal wedge top. Leg 1, pull back leg 2, pull back leg 3. 36, small bar. Not a lot of risk for the bears. They could take that short and then they're in profits with 36. I actually took that short and I got filled right around here for a limit order. Stop order bears made money, but I was a limit order bear that got filled and then exited right around here. 38, it rallied, so not the best situation for the bears. They wanted to see a spillover, a new low of the day. 39, rallies and then sells off, so bulls are now getting trapped. And then you see 40. This is becoming hard to trade. It's a tight trading range, tough for breakout traders. We went bar 40, so bar 41, bull bar closing on its high. 42, bear bar closing on its low. We have bear bar, bull, bear, bull, bull, bear. Very difficult to trade. I remember when I would trade stop orders, I would get absolutely annihilated, thinking there's going to be a new low, thinking it's a reversal, thinking it's a new low, thinking it's a reversal. So if you're trading stop orders, it's important to recognize market conditions. And the market conditions are, we can tell what the market conditions are by the market cycle. So we have a breakout, 15 opposite bar, starts the channel phase. We channel higher a little bit, and then we get 3 more legs down. Any leg past leg 2, so leg 3s, 4s, and 5s are chain that favors for a new low being made, go down. It favors reversals, and look what happened when bears tried to make a new low here, tried to make a new low here, they tried to make a new low here, and it reversed every time. That's because the probabilities favor reversals instead of breakouts. Where are we? So yeah. Up, down, up, down. 42, small bar. Best to just, I think if you're long or short, it's okay to just hit out of that position. 44, sells off and then rallies. 45, rallies and then sells off. More trading range behavior. 46, rallies into the EMA. There are sellers waiting at the EMA. We see a big tail. 47. I think this leg was climactic because if you watched it, it sold off fast and then rallied. That's climactic price action. We have a big bar right here and we have a big hidden leg on bar 47. Market goes sideways. 48 has a tail. There's still sellers above the EMA, but they're not really selling below the EMA. In fact, 49 has a bull tail, so that tells you that there's sellers above the EMA and buyers below the EMA. That's trading range behavior because bears are selling high, bulls are selling low. Then we have a 3 bar bull microchannel. I actually like this trade, but the context for it was bad because it traded right into bar 30, which was followed by this big bear bar. Bar 51 and 52 create a bull gap, and now remember the characteristics for trading ranges are gaps get closed. So here's an open gap, and now it gets closed, and then very shortly after this gap gets closed. So that should let you know we're in a trading range. 53 is a sell-off and it rallies, so that's that first pullback. And there's a hidden leg. So leg 1, the climactic leg for the bears, this bar 47 also had the first leg for the bulls. Leg 1, pullback. Leg 2, pullback. Leg 3. That's a wedge top into resistance. I had a sell over here and I scalped out around 57 because I was hesitant to know which way the market would go. So I just took small profits. 2 bar reversal, 54, 55. And then it sells off. 55 gets follow through, but it's not good follow through because there's a bull leg right here. So bulls are still trying to buy the bear bars. Leg 1, pullback. Leg 2, pullback. Leg 3. 57 is a pullback for the bears, and it also looks like a pullback for the bulls. That's why I got out of my short because I started to get confused. If you're confused, that's trading range behavior. 58 sells off, and then again more buyers below the EMA now, and then it rallies. 59 inside bar. 60 sells off, but not making a new low. We sell right off into the 59 low, and then it rallies for bar 61. Trading range behavior, deep pullbacks. bulls that bought this up here, they weren't really that inclined to buy it. You can see when the market sold off below the EMA, it rallies, and then we have an inside bar, 63. I think it's tough to trade here. So if you guys are, it's very easy to flip. That's why it's easy to buy here. It's easy to short this. It's easy to buy this. You make a couple points and then you get trapped. Now you're down a couple points. So if you're a breakout trader, it's very important to recognize the conditions. Breakouts are brief. Here's a breakout. It's brief. There's a breakout. But that's a breakout in trading range. Here's a breakout. But that's a breakout in trading range. So hard day. Definitely a challenging day. 62 or 64. Bull bar closing on its high, immediately bears sell this, and then we see a sell off into the EMA. It bounces. 66, another inside bar. 67, bull bar closing on its high, with 68 being the nicest looking bull bar next to bar 50. So just how I mentioned right around here, leg 1, pullback, leg 2, deep pullback, leg 3. This leg right here also gets its own 3 legs. Leg 1, pullback, leg 1, pullback, leg 2, pullback, leg 3. Wedge top right into the previous swing high, and it sells off for many legs down. All these tails are pullbacks. Leg 1, pullback, leg 2, pullback, leg 3, deep pullback, leg 4, deep pullback, leg 5. And these tails are also rallies because that's how they were made. So you can say this is start the first bull leg 1, pullback, leg 2, pullback, leg 3. It's kind of how the market is twisted together. Let me just draw this real quick. I talked a lot about fractal legs today because it's trading range, so you have to see the fractals, the fractal legs. So I just counted. Okay, this is what we're gonna look at. See, that's what I was counting. So, because remember these were dojis, so dojis have a sell-off and a rally. So it sells off for the bears, leg 1, pullback, leg 2, pullback, leg 3. For the bulls, leg 1, pullback, leg 2, pullback, leg 3, and leg 3 doesn't make a new high. Challenging day. I did all right. I trade limit orders, and limit trading ranges they favor limit orders because you're going to be putting limit orders at the highs and limit orders at the lows. So I did all right. Let me know how you guys did. I hope you guys learned something. To all the mothers out there, have a good Mother's Day. If you want to learn more about price action, join the membership channel. Hit the join right there. Message me for a link to the join. It's fun stuff. Join the Discord. Talk to us. Let us know what you're up to. Have a good one, everyone. Thank you for your time. If you learned something, share the show. Don't be a hoe. I'll talk to you later. Bye.